Yo, what's up, everybody? It is Thursday, October 3rd. Is it the 3rd? Wait. Yeah, I think it's the 3rd. All right, the strike is over. The port strike is over. They reached a deal, and the longshoremen, the workers, are going to be going back to work immediately. So, I don't know what kind of impact it has had already. Probably nothing. It's had more of a psychological impact on the markets. Everybody freaking out that there's going to be another inflation spike. I said there was not going to be one because this was not the equivalent of the COVID situation with a global shutdown of the entire global supply system, accompanied with massive global government stimulus. It just wasn't the same situation. So I didn't think it was going to amount to any big deal. Anyway, the strike is over. What I want to talk about today, yesterday I did a whole video, or a good portion of my video, on process. Process is like the things you have to focus on to be very disciplined about, systematic execution of your plan. And, I have to admit that, I've been touting the bond trade now since leading up to, even prior to the rate cut. And I also said that it's not just about the rate cut, although there will be more rate cuts. It's the macro picture, the economic picture is about what's going to happen to the economy. And I've been saying that the premise of that trade, the rationale behind that trade, is that we're going to have a slowdown in economic activity, not just in the United States, but globally. And that's going to be precipitated, at least initially, by global rate cutting, which is the fiscal equivalent of applying fiscal drag. And, the trade was working out initially, at least leading up until the Fed rate cut. And now it has been giving back some of those gains. And, not to, minimize the give back, because I know some of you, got on board with that trade, and now you're like, oh, wow, it's not working out. I'm not trying to minimize that. I understand that, you had some gains, and maybe now there's not as much there, or maybe there's some losses even there. But this comes back to what I was talking about yesterday about process. Like, if the rationale behind doing something is a set of conditions, let's say, then that's the rationale for doing something. Yesterday I talked about price. I talked about price in the short term can be all over the place. There's a lot of things that influence price in the short term. Okay, it could be some big entity moving around on a position. It could be a headline. It could be some geopolitical event, something like that. That is not the condition that got you into that trade or that investment in the first place. You have to look at that condition and you have to say, is that still in effect? Is that still valid? Is that still playing out in the way that we thought it was going to play out? Regardless of time, it doesn't. These things, I've said this so many times, like if you're looking for instant gratification, like this has to play out tomorrow. This has to play out in the next week or even in the next month. In the case of policy changes, when it comes to monetary policy, let's use that as an example, because that's what we're dealing with here. Circumstances dictate how quickly that's going to happen. The Fed started cutting rates last month in September, and it's going to continue to cut rates. And the macro environment, the macroeconomic environment, as far as I can see, is not going to take away from that policy, direction that they're in right now. We're going to see a slowdown in economic growth, and that's going to, the only way that central banks so to speak, combat that or remedy that is through rate cuts. So that's going to happen. Did it is it going to happen right away? Well, we had a rate cut in September. We're going to have a rate cut in November. Is it going to be another jumbo rate cut of 50 basis points? Maybe not. I mean, the market is now pricing in a 25 basis points. So everybody's getting freaked out over that. Now, and that, you have to understand something. When you're dealing with a monetarist paradigm or a monetarist trade that is based on monetarist understanding and expectation, you got these people, monetarists, who are all in on a singular view of what affects economic activity, and they all do the same thing at one time. This is like a stampeding herd. And their views can change daily, okay? There's a tremendous amount of volatility in this because you have a group which is essentially all of the financial sector, okay? You have that group which has a wrong understanding of the religion that they follow, which they don't even understand it, okay? It's a wrong understanding of what they follow. And they are very emotional about it. Like any little thing can change their view from day to day. Now, I use this example when I was talking to a friend of mine today. I said, imagine if, I don't even have to imagine, I'm sure this happened. Back in the day of John D. Rockefeller, who owned Standard Oil, which was a monopoly in the oil industry in the late 19th and early 20th century. Standard Oil, John D. Rockefeller, at the time the richest man in the world. You had all these little producers, Rockefeller was the price setter, the production setter, but you had all these little producers. Can you imagine all of them, together as a group, trying to guess what Rockefeller was going to do in terms of pricing and output and stuff like that. And every day, if Rockefeller said something, or if there was a headline about what Rockefeller said, they would switch. They would change their view. They would alter their production. They would change their pricing on a kind of motivated by just a guess, or driven by just a guess of what they thought Rockefeller was going to do. This is exactly the same thing that's going on with this whole monetarist garbage. Everybody in this game, and I say everybody because, like I said, this is 100% of Wall Street and the financial community is fixated on monetary policy, and that means what is Powell going to do? What is the Fed going to do? So leading up to the rate cut, and I said this at the time, I said, it's all discounted. It's all going to be discounted into the market, which it was. When the rate cut happened, it started to go down. Is this the end of the trade? Is this it? Is this it? Is it over? Should you bail out? Should you take a loss? Oh, Mike Norman was wrong. It's been going down now for 2 weeks. I mean, that's up to you. If you're needy and you need that money and it's not working out and you piled everything into that, for the hopes like you're going to win the lottery, that's on you. I never recommend being overextended, okay? But have the circumstances changed? Has the outlook changed? Stick with the process. The economy is going to slow down, okay? That is the underlying fundamental rationale for why we got into this thing. If you think that's not true and we're going to have a re-acceleration or some kind of acceleration from here, then yes, you have to get out because you are essentially saying that the conditions that got you into this are changing now and we're going to have an acceleration. Based on what? I would ask you, based on what? I'm giving you concrete reasons, or at least reasons, why I believe there's going to be an economic slowdown. And again, an economic slowdown, there's only one way that the global central banks, who are completely into monetarism, there's only one way that they so-called remedy that, and that's by cutting interest rates, just like the same way that they so-called remedied the inflation situation by raising interest rates, which created a gigantic market rally to all-time highs in every single market across the world, maybe not China, but they were completely wrong. So it's like, if you got into this, putting all your chips down, wanting to win the lottery, it's like I said one time, another fantastic quote from the book, Reminiscences of a Stock Operator by Jesse Livermore, when he used to remember these guys down on the floor of the stock exchange who said, well, I'm going to buy my wife a mink coat today. By the time he got the money for the mink coat, he could have bought 10 mink coats at the store, okay? That's where over speculation gets you. So like, my question to you is, have the conditions changed? I don't believe so. All right. And even if, let's talk a little bit about geopolitics. We don't know. Israel is going to respond, is going to retaliate to what Iran did, firing those 180 ballistic missiles. Maybe they are going to go after Iran's oil production. I don't know. I don't think so, but I'm not a great geopolitical analyst. A lot of things I've said in the realm of geopolitics in the past, haven't worked out that way. But even if they do, higher oil prices are not going to create an inflation, okay? And they're not going to create a recession, okay? The United States is the largest oil producer in the world. What happens with a spike in oil prices, at least in regard to the United States, it's a redistribution of income from consumers to producers, and also we're a very large exporter of oil, so you have net transfers from the foreign sector into the United States economy as a result of those exports. In other words, the trade deficit shrinks. In other words, the GDP goes a little bit higher because of that shrinkage in the trade deficit. Yeah, there might be some cutback in consumption, but everybody's got to buy gas to go to work, so there's not going to be a lot of cutback in consumption. So I don't think it's going to happen as a result of that. And so the media is talking about a spike in oil. It's at freaking $73. I mean, that was a price level that just recently we were saying, oh, oil's weak. It's going down. So like, that's an exaggeration. That's hyperbole. It's typically what the media does. And you got to control yourself, man. You got to, just like, again, everybody's freaking out because it doesn't boom, boom, boom just happen like that. I mean, that's, I don't know. I've been over this so many times. Anyway, that's it for today, folks. Please like and subscribe. I'm trying to get 10,000 subscribers on this channel. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.